This is Randy Finney with Right Side of the Chart, and today is Tuesday, September 2016. It's the day after Labor Day. We just had a 3-day weekend here. The markets were closed in the States for Labor Day. So this is the beginning of the trading week, or I should say the end of the first day. I'm starting this video. It's about 4:30 Eastern Time, about a half hour after the market closed. And what I wanted to do is an update on the long trade ideas, and probably tomorrow at some point this week, I'll do a follow-up video on updating the short trade ideas. And before I get into the trade ideas, there aren't too many to cover, so this video will be relatively brief. There's only a handful of long trade ideas right now, active longs on the site, I should say. Uh, let's just take a look at the market and what's gone on. The reason the trade ideas, really both on the long and short side, are lighter than normal is due to the recent market action, especially over the last month. If you take the box that I have here, what I'm highlighting here is the trading range that the market has been in, and this is an unusually flat and tight sideways trading range, or flat and extended, I should say. It starts back with this gap up on August 5th here, and today is August 6th. I'm sorry, September 6th, as I said. So a month and a day, and you can see that from top to bottom, that trading range runs from about 116 to 118, or roughly 1.5%, 1.6% from top to bottom, and that is very unusual. In those trading ranges, now trading ranges by themselves are far from unique or rare. They're fairly common. They tend to occur after a pretty good move up or down. It's when prices digest gains or losses, when the market digests a gain or loss, or a stock may have a sideways trading range. In this case, it's the market. So here's one back in, looks like, what was that, early June. And you can see a very tight trading range, similar to the one that we had now, just much smaller in scope and duration. And that trading range, like many, was resolved with a break to the downside. Now, when I say like many, these things can break either way, and that's what you need to respect. This just as well could have gapped up. And very often, not always, but more often than not, especially if you have an impulsive move out of the trading range, not just a little limp through like here. That's a little whipsaw signal. You want to see an impulsive move. So a gap down in price, especially if there's a surge in volume, that's an impulsive move, and there was follow through. So what happened is, from this trading range started the next trend. The next trend was down. Prices started moving down. Looks like an ABC correction, wave down, wave up, and then final wave down. So there's a healthy correction following the break of that trading range. And my expectation, although anything can happen, we'll probably see something similar sooner than later. This one has gone on for quite some time. As I mentioned, this is unusual in how tight prices have been in such a flat sideways trading range. Here was a tight range, but it was an ascending price channel, and that rolled into, again, a very nearly as tight range, but completely sideways. So these are the levels, and again, we had a couple false breaks a week or so ago on just very brief intraday breaks below 116. So we're not looking for the first tick under 116 or the first tick above 118 for a bullish breakout or bearish breakout below 116. We're looking for an impulsive breakout. What that could come in the form of maybe a large gap up or down below those levels. It could come on a move that moves through, and then all of a sudden you see a very large red candlestick on the downside or green candlestick on the upside, indicating strong buying with an increase in volume, ideally, maybe some follow through to the downside. So that's what I mean by impulsive. And if and when we get that, there are no guarantees that the first big move up won't be a whipsaw signal, especially if it's faded pretty quick. In other words, if we gapped up above 118, but then sold off quickly and moved down, that would be bearish, obviously. Or even back inside the range, that would be a failed breakout. So that in itself would be bearish if we had a failed breakout, or bullish if we have a failed breakdown and prices shoot up impulsively into the range, and especially shortly afterwards going to break out. So that's on the market. Let's get away from there for a second. If and when this trading range resolves itself, then we'll adapt accordingly. But let's take a look at the trade ideas. We'll go to the site here. We're at the front page of the site. Most of you probably know how to navigate the main menu up top. If you hover on trade ideas, You have the trade ideas are broken down by categories. You have your the bulk of the trade ideas on right side of the chart are right over here. They're swing trade ideas. Swing trades are trades lasting typically, I would have to say on average about three weeks or so, give or take. Some of these swing trades are explosive chart patterns. They may hit their target within just a few days or sometimes even on the same day. And it's not unusual to see a swing trade go on for 3 or 4 months. So, there's no firm definition, but like I said, on average, you're looking at least a few weeks to sometimes a couple months on the holding periods on a swing trade. Whereas we also have long-term trades. I wear multiple hats. As an active trader, my primary trading style is swing trading, but I'm also an investor. I have long-term accounts. I and take, although I can't possibly take every trade on the site, I do take the majority of those. And typically in my longer term accounts, I take these long term trades, IRAs, kids' college funds, things like that, growth and income trades. And then you have your completed trades. If you click on any of the categories, which we'll do right now, it'll give you a description. So let's click on long setups and let's dig into the trades here. So you have the long trade setups, ACB, FF. I'll touch on this because it's also an active trade. That will probably, I'll remove this from the trade setup list because it's doing well, very profitable. But at this point, at least as a swing trade, this one also happens to be it's a dual trade, a swing trade and a long-term trade. And those two, although very similar and related, they don't have to be mutually exclusive. But they can be. So I have different targets for swing traders on ACBFF as well as longer term targets still to be determined on this one for the long term trade idea. Point being, as a swing trade, as this one's coming close to its target, which we'll get to in a second now, it no longer offers an objective entry at this point unless it were to pull back again to a support level. Because we're closer to the target now than we are to the stop level. So not objectives. But here's your description under each category. Again, if you're not familiar with what that category is or what I'm referring to, just take a look click on the category, and just below this, we call this a symbol tag cloud. These are symbol tags. If a symbol, a post is tagged with a ticker symbol like IPI or ACBFF, I'll also refer to these as tags. Right here you can select the tag. Here's all your tickers. Anything with a dollar sign is typically an index, even a commodity index like coffee. And then you go down here, if it doesn't have a dollar sign in front of it, that's just the ticker symbol for a stock or an ETF. Okay, so those are the tags, and if you wanted to take a look at a certain trade, let's go ahead and do that. If you come in through this trade idea, any of the trade idea categories, and you click on a ticker symbol in the cloud, these are all hyperlinked. You can see how they change color when you hover. What that will do is load only the post associated with that symbol tag under that category. So what I did, we're in the trades long setups category right now. So when I clicked on ACBFF, it's only showing me posts assigned to the trade setup category. Now let's go in through active trade long, because after I posted this trade entry, oh no, there haven't been any updates. I'm sorry, we just recently added this one back. But if there were additional posts under this category, they would all appear right here. So let's take a look at this one and update the trade. So ACBFF, this one we just recently, for those not familiar, we had this bearish pennant pattern. We entered long here, which in just a few days, I think it was 2 or maybe 3 trading sessions, we hit it for a 47% profit. We hit this first target, which I had set just below the measured target for the bullish pennant pattern. So we hit that, and as very often is the case, when a price target is hit, you have a reaction, which is a pullback and or consolidation. This one was pretty aggressive, and it pulled back within 2 days to this former resistance level I had at 60, which, remember, once resistance is broken, it then becomes support at that point. So ACBFF was added on here around 60 cents at that resistance level, or the support levels at 59. So that was an objective entry, and let's take a look at where we're at today. ACBFF, and let's look at the daily chart. We'll zoom in a little bit. Here's that same chart. So that's where we re-entered here. And as of now, let's see, did the math. The first trade we hit that was a quick 47% gain. This one's already up about 30% today from entry. We picked it up right here around 60 cents. And through the highs today, it was up around 30% so far. And I set that target on this one is at for this current swing trade is 94 cents. What I like on this one, so far so good with volume. We had the stock did pull back, but we're starting to see some more volume come back into that stock. And again, I've already made the case. You can check the notes on this one, especially on the previous trade. I gave some link backs to the company site, a little bit about the fundamentals of the company, and my reasoning behind adding this as a long-term trade. So swing traders, that is still our sole profit target at 94 cents. If and when it gets there, if it moves up a little bit higher, I'll probably raise the stops on it. Long-term traders, we're going to leave the stops as is, and as I mentioned, my price target will certainly be above the $1 level. That's what I'm waiting to see, a break and a sustained move above the $1 level, which I think will be pretty bullish for this stock if that happens. So ACBFF still looks good. All right, let's go back to the site. Back to trade ideas, long setups. There's one setup that I posted back on August 22nd. You can see this is when you look at go under a category, the date next to the symbol, click on the symbol, is the date of the most recent update or post on that. So on August 22nd, I posted a setup for JO, which is a coffee ETF, bullish falling wedge pattern. We can take a look at it here. You can see this nice bullish falling wedge pattern had just broken out, but it was up pretty sharply, almost 4%. You can probably just barely make that out there, 3.62%. And I mentioned that ideally I'd like to see a pullback to offer an objective entry. I wanted to point it out to those interested, but mention that ideally you'd like to see a pullback. Now, Joe did pull back, and this is why I put these up there. I can't follow them all. There's so many trades I follow. I put a lot of unofficial trade ideas in the trading room. So this was that point of that breakout right up here where the crosshairs are. We did pull back. We didn't come all the way back in for a back test of the wedge, but we came back to support right there, that previous reaction high, and that was an objective entry by all means, and that level held. And you can see that Joe has since moved up. This is that same resistance zone that I just showed on the 60-minute chart. And we just gapped above there. And so far that resistance zone, remember, broken resistance then becomes support. So we gapped above it. And look how well the charts have played out. I have not modified these lines since that original setup a few weeks back. And you can see perfectly the low of the day was at the top of that resistance zone once we gapped above it. Came back, back tested it, came back, back tested, came through it briefly, and have since moved higher. So this one looks good up to that target that I had there at 23.31. If you're in it, and I just wanted to bring it up, it's not an official trade because I didn't catch this pullback in time. I didn't highlight that as an official entry. And one thing I'll never do on this site is, in hindsight, try to add something or I can't add it as an official trade if I didn't tell you ahead of time buy here, or at that point when it pulled back, if I just caught it at 20.75 or somewhere in that area, $21, I would have had to send out a post to make it an official trade idea. So I'll probably drop Joe off the setups, but I'll leave it on there for now for those of you interested, because I do think there's more meat on the bone on that trade. All right, trade ideas. Now let's go back to that. Covered all the ones on the long setup. Everyone in there is an active trade right now except for JO. So ACBFF we already covered. IPI, let's click on that one. All right, that brings up the IPI post. We had this trade set up an entry for IPI. Well, let's just jump into the chart. IPI. That was based off the daily chart. And here's our two price targets, T1 at 177, T2 at 249. IPI looks good so far. The first day was really taking a lot of volume, and I had my concerns because that volume tapered off. We had another trade in the ag input sector that went on to really show us it was a failed breakout in that other trade. That stopped out. Gosh, the symbol R, what was that? RDKA, I believe, if I'm not mistaken. So that one was stopped out, but IPI actually did well so far. It's held well above the stop. You can see this long-term downtrend line, the yellow downtrend line. The breakout was there. It was on high volume, even though most of that volume came early in the day. Doesn't matter because that was a high volume breakout. The fact that it's stuck so far, although we entered a little higher, we closed at 142 today. Let me look at my notes. Entry price was 149, so call it flat. We're essentially flat on this trade, slightly underwater, but so far it's held up. And it's moved up a little bit each day on average, from you can see there the candlesticks, away from this downtrend line. And I also pointed out this orange uptrend line, and that really defined a symmetrical triangle. These two, that from this was the apex of the pattern. However, you extend that downtrend, the uptrend line out, and now that's support. So so far so good. I already, again, reference the notes. This is a low price stock. It'll be volatile. A lot of the trades from going forward, I'll start to add a suggested position, beta adjustment to your position size. So in this case, like a $1.42 stock, um, you definitely want to keep your position below average size. In other words, below average means if you take 10,000 in the SPY, which is just the S&P 500 tracking ETF, something like this, you maybe only want to put 3,000, 4,000, 2,000. It depends on your risk tolerance, and that's assuming if the trade even fits your risk tolerance and trading style. These low price stocks can explode. I mean, if this one goes on to hit the profit target, you're talking, or targets, there's about a 35% gain to T1 and roughly, almost a 90% gain to T2. But with that above average return potential comes above average risk potential, or risk of loss potential. So again, reference the notes, but I just want to point out that as of now, IPI looks fine. Next one up, let's go back to the site. We had Mosaic, symbol MOS. Again, MOS was added. You can see back here, when I go down the category, since it's an active trade, it will show me the 2 posts related with this trade. However, if I click on the symbol anywhere else, if I use that select tag and I type in, right now I'll type on my keyboard, you can't see this, MOS. See how it jumps down to MOS instead of having to scroll all the way down there, and then click on that. If I were to do that, or come down to the bottom of each post, you can see that this post is tagged with the symbol MOS, which is linked. Now I click on that, and what it will do is load up all the posts ever made on Mosaic in reverse order, reverse chronological order. So this will go down. I've traded this stock many times on and off over the years, so there's probably pages and pages. That's good if you want to get a feel for how this stock has traded in the past, how my calls have been on this stock, etc. But again, if you come in through the trade idea category, click active trade longs, you don't want to probably be overwhelmed with hundreds of posts on Mosaic, so you just take a look at the 2 related to this trade. So we'll click here. I won't read it. I'll let you read through the notes. I'll just give you a brief history on MOS. We first entered. This was really a re-entry trade here. We entered MOS early in this year, in early January. And what happened? The stock exploded from that entry. The timing was very good, and we made a 16% gain in 3 weeks, which I think, if I recall right, that was at my second price target. I had a third target for MOS. It's all in the notes here. You can see the charts. It exploded to hit that second target. My gut, my experience, everything told me too much too fast. I booked full profits there, so we were able to lock in a 16% gain. And then MOS immediately turned around and dropped from that point. The very next day it peaked and dropped 20% from there. So, and possibly more, I forget where it was. But we re-entered that when it pulled back to support. Let's take a look at the chart. So here's Mosaic. We re-entered for this current trade because remember, I closed the other one out. That's why all the previous posts associated that trade are now gone to the completed trade categories. So when MOS pulled back to support, we re-entered and started a new trade on this one on April 13th at around 26.15. The stop on that trade was later updated after that first entry post to close below 2370. This was the old previous stop. You'll have to reference the notes on that on the previous post for Mosaic. So that remains the stop, and you can see the stock has remained traded healthily, comfortably, I should say, above that stop level. And it continues to grind around in this range. So what you have here, you can see this shaded. Here's a yellow box. This defines that sideways trading range. This is a very large range going from, top to bottom. It's about over a 20% range. So how does the stock look to me now? I'm watching this uptrend line. We're well above the stop. I may raise the stop at this point. I could even draw another line to cut this trading range in half. I see a lot of reactions back here. It seems that this is the midpoint of the range, and when the stock gets above it, it holds above it. When it gets below, that finds resistance from below. And again, when it gets above it, that midpoint tends to act. It's not an exact hard line, tends to act as support. So the support levels, the levels that will concern me on Mosaic, would be a break of this uptrend line, and then a break or sustained move below this midpoint. And again, I may raise the stops on Mosaic. As of now, they remain on a daily close below 2370. But I still like this as a long-term trade, and I'm looking for ideally a breakout above this this sideways consolidation or basing pattern, if you will. And the price target will still be somewhere up here around this T3. That was from the original trade. It was the third target zone. Remember, I pulled the trade early at T1. I'm sorry, at T2. And this will be the next price target. And I'll follow up if and when we make a sustained breakout. There was one little whipsaw signal, but you see why I like to trade off using daily closes on daily charts. These daily, you can see little candlestick, they call them wicks or shadows. That means it's an intraday move that failed to close and fell back below. So until and unless Mosaic breaks to the upside, gives us a definitive break to the upside of this trading range or the downside, and that's why the stop is set not too far below it. It's just grinding around. However, we're getting paid to wait in this one. This is also a growth and income trade. It's a swing trade as well as a growth and income trade because of the dividend. Mosaic has paid since we re-entered this trade on April 13th. Let's see. The stock went as high as 18.4 at the end of August, a few weeks ago, a week or two ago. We were up almost 18.5%. Right now, as of today's close at 28.65, you can see there we're up 9.5% from the entry. However, add in, we've been paid 2 dividends since we entered on April 13th, 2 dividends of 27.5 cents. That's a total of 55 cents in dividends. And what that does is gives us a net return or profit at this point, as of today, if you closed, of 11.74%. So this is why I like growth and income trades, and it doesn't bother me that Mosaic is in this range as long as the stock doesn't go underwater or get stopped out, and as long as the chart looks good. The dividend has been reduced a couple times actually on both, I believe. I know on Potash, which I'll get to in a second here, it has several times in the last year. However, it hasn't been eliminated in either of these two stocks. So it's still paying a dividend, showing right now, if this is correct or not, about 3.73%. So not bad in a zero interest rate environment. And again, we were being paid out some higher dividends on this one earlier. So that's what I'm looking at there. Let's jump over to the other one, which is Potash. Very, very similar, related company, same industry, another fertilizer stock. Those two tend to move together. Let's see. Trade ideas. We'll go to active trades long. And yep, this will be the last trade update. So here's Potash. This is all in the current trade. Now Potash, it's crazy on this one. Potash, let's go to the chart real quick. Missed that target around the same time when I pulled Mosaic. I was this close to pulling Potash, but it had fallen at that point. It came within. You can see the third target. It had already hit the second target. We could have booked some nice profits if you took full profits. Some people take partial profits at these earlier targets. This third target is where I had my eye on personally, and the little bugger fell shy. We hit a high of 1838 versus a target. I'm sorry, 1938 versus a third target of 1947. However, the charts look good, so I left this one on, and part of the reason I pulled Moss off anyways at that time is to reduce exposure to the sector. As I say, birds of a feather flock together, and these two companies, although they are completely different companies, they're doing the same thing, and they tend to, I guess, have the very similar fundamentals and business models and everything else because their charts tend to mimic each other. So as with Mosaic, Potash reversed from there and has grinded around. However, so I've left this one on as an active trade. And I also mentioned when it pulled back on that first pullback to support back in April, or maybe it was this one here, that it was an objective add-on. So you would have actually lowered your cost basis as a long-term investor or growth and income investor, assuming you didn't take profits at any of these earlier targets. So the quick update on pot is we added that trade. The original entry was back here in right off the lows on January 13th. We bought it at 1577. That was our entry. Since then, it has paid out 7 dividends totaling $2.37. So as of today's price, if you just held on through all this grinding and up and down, closed at 1769 today, or 1766 here. I calculated it earlier right at the market close. I guess this didn't update. I used 1769. Add in that 237 dividend in dividends, total dividends, I should say 7 dividends, gives us an adjusted price of 20.06, which is a $4.29 profit, and that gives us a profit of 27.2%. So again, we were in here early. We've ridden through all this, but those dividends are really nice, even though they've been reduced, as I mentioned in pot. They were considerably higher before, but the dividend has not been eliminated, and I can't I don't think it will be. There was a very strong likelihood that would probably be reflected in the chart already. I think my guess is the worst is over in the dividend cuts, but there's never any guarantees in that kind of thing. But with that being said, still, 27% profit so far. Sure beats the market, beats a lot of other things out there. And again, I like this one as a long-term trade. And the targets have never been adjusted. This is still our final target here at 22.20. So we'll see if it gets there. All right, that's it for the official trade ideas. There was one on Friday in the trading room. I mentioned U.S. Steel. For those of you that have access to the trading room, just click on the swing trading group to the right-hand side. U.S. Steel, I like that one. I mentioned it was close to the end of the day on a Friday before a 3-day weekend, so I didn't put it up as an official trade idea, but I mentioned it as a buy around here at this 1868 level, down around there, just above there. I give you a buy range. Up pretty nice today, gained 3.7% or 3.07, so about a 3% gain today, and that's from about where I posted it in the trading room. And we're right at look, you can see it closed right at that downtrend line, this descending price channel. Bullish divergences in place. So if you took that one, so far so good. I would, at this point, you may want to raise your stops, or you can keep them where you're at. The next buy point would be a break above this downtrend line, and targets are what I posted in the trading room. These are the unadjusted levels. These are the actual resistance levels. So I said in there, I believe, set your sell limit orders a few pennies, a little bit below that. And that one's resistance is at 120.96. So I would say 120, I would say 120.88, 120.85 seems like a comfortable target on that one. And then this one, if you want to hold out for that additional target, probably the resistance is at 221.92. I would set my final sell limit order at 221, just say 221.76 to be safe. Yeah, that's a pretty high share price. That's why. Oh, wait, what am I doing here? Oh, that's not a $200 stock. I must have had a double extra 2 in there. There we go. That was 22.92. Let me make sure. I don't know why that should have showed through there. That's odd. The system must have did that. Yeah, it sure did. Oh, okay. Sell 1, sell 2. Okay, guys, I messed this up. what it was. I had sell target 1, sell target 2, and I just bunched that all up. All right, let's put that back down to where it was. I'd have to look where I had it set before. Again, what I was saying earlier, just forget about the 200, the $20 level, 2096, and wherever I had this before. I'll have to fix that. I should be right there, regardless of where I had it. I'm looking at these reactions here, 2196. Yes. Okay. So just set that they're close enough, and they're only $21 stocks or $21 level. So maybe about 8 cents below the actual resistance level there would be where I would set or where I will be setting. We'll see what the market does. If we get up to the 2085 area, I'll probably just take full profits. I did take that one on Friday. All right, this has been Randy Finney with Right Side of the Chart. If you have any questions, just shoot me an email or a message in the trading room. Have a good day.